Okay, and welcome to another video put out by Clinical Trader. Today we're going to take a look at the All Ordinaries Index for the Australian market. Today's date is the 30th of September 2021. We can see on our chart here that we have the All Ordinaries Index. And I've put this on here to show you guys really what my expectations are for the Australian market over the next probably month or so. Is probably my target here. I'll zoom out here real quick and I'll show you this here. This is what I wrote. When was it? It was a while ago now. Maybe, what was the date then? Okay, on the 10th of September or the 9th of September, around about then. Okay, so I made this note here. All Ordinaries Index has broken the long-term dashed orange trend line. That's the trend line it's heading up here. It goes back all the way to, what's that? April 2020, and it rises. Now, I didn't put this in at the time, but I just simply connected the low points as we moved our way up on the index. So keep hitting it and bouncing off that orange line. So really, that becomes a significant trend line. The more times we hit it and bounce, the more important it becomes. So a really important line. It broke. Okay, price broke down right here. In fact, I'll zoom in a moment. We'll take a look at that. And now, given that it has broken down, I consider that to be bearish, and that's my point right here when I write this, because of how far back it extends in time. All right, so not only did it rise up, we also have we actually had a couple of different price channels forming here. So we have this longer term orange dash line, and we have the green solid line. And I've connected a high here, it broke through, and then we keep coming back and tapping that as well. So it becomes quite a significant trend line up to the top of the chart here. I wrote on the day that once we broke down this on this orange trending line, that we really needed to find support at the green line. Okay, really important. A break below that, I was quoting, would see us come back down to the 200-day moving average, which is the blue line we see right here. So I'll zoom in and we'll take a closer look at that now. And at the time of posting, I was questioning whether or not we bounce off the green line, head higher, and then come back and then keep going higher, because that's been the trend for such a long time. We've found that support, and when the markets just keep heading higher and higher. But on this day, as we tracked up along this orange line, rising support, we saw a number of days in a row where price tried to break down. Okay, it came down on this day here and then rebounded off this wick. Maybe I need to zoom in here and show that a bit clearer. So yeah, it broke down on this line and rebounded. Broke down again, rebounded, held above. So this was looking like a really bullish move here. You know, it was respecting the support and it looked like we were going to head higher. And then on the 6th of September, we saw this big down day where we got down to these lows, turned around again for now, what's that, a third time, and broke back above the orange rising trend line. And then again on the 4th day, we saw the same thing, break down, recover. So at this point, because of the number of times that we see the price continually reject lower prices, what's that? 1, 2, 3, 4, even 5 times over a period of about 7 trading days that we saw that rejection. It really did look like we were going to head higher. And it's that consistent rejection that gives us clues about the next move. Now, all the clues were pointing towards us heading higher at this point. So for it to then turn around on the 9th of September and fail, that becomes a really important point, because all the clues were pointing to going higher. Yet we finally broke through all these previous lows, rejected all of the higher clues that were coming, and we went lower. And of course, on the way down, we took out all the stops, all of the buy orders, and we ended up down at the bottom here. So we've got a bit of a void now that's formed in this big red candle at these price levels. And that makes it really easy for price to then rebound, come back higher, and test that again. Now at this point, I hadn't put this line in here. You know, this is no man's land. You could have drawn it up here, and you would have seen that it broke it. You could have drawn it up to this trend line here, and it broke up to this one. So it's not a case of knowing which angle of descent we need to trust here. Okay, all you can do really is pay attention as things unfold. So we saw it come up, hit the line, reject, 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 but also support coming right into this point here. I guess you could call it a bit of a squeeze. It was going to go one way, it was going to go higher, or it was going to go lower. It chose to go lower. So now what we do is we have to respect this point here, which is why we connect this previous high to that point. Okay, and so that becomes our high point. If we could get through that in the future, we would see higher prices for sure. Well, not for sure, but more than likely. So anyway, it broke down, it came back up, it tested it again, didn't quite get there, and it rejected it. And again, there's that big red candle, we went lower, and finally this capitulation here, this candle, we just went really, really low. To me, that was a big day. What was that? The 20th of September. So I consider that to be quite bearish. We've seen two big bearish days here, and I think that really does paint the picture for the future. You can see that again, that void was created, so we recovered a little bit through here, got to that previous high, and then we rolled over at this, I think that's the 50-day moving average, and another big red day. So we've seen those big red days, well, this one was 2 days, but we've seen big red candles, we've seen those a few times. And so that's fairly bearish in the overall scheme of things. So we expect that with 1, 2, and then 3, came all the way back down here. So once again, I'd expect this void to be filled. I expect we'll come back up here, probably hit that 50-day moving average. If we don't hit that, we might come up to the black line again, and I think we'll roll over and head lower again. But it really does come down to what sort of sentiment's coming into the market. At the moment, we're really just trying to make some decisions about which way we're going to go. These bearish big down days are giving us clues that there is distribution taking place. So that's the big boys getting out of the market. So we'll have to wait and see what happens with that. That's my expectation. I do think we'll get another rally through here. Perhaps, I can't give you a time on that, but over the next perhaps week or so, and then I think we'll roll over again and head on to lower prices. Now this arrow ends right at this point simply because if we were to expect this to continue, that blue 200-day moving average is going to flatten out and probably end up somewhere in this vicinity. And it also matches up with the support or the resistance we saw over here. Okay, rejection right there, and then resistance, resistance, and breaking it through. So this is an important point in the past, and I think it will be respected in the future. And we will see what happens at this point when we get down here. None of this is guaranteed. It's just that this is kind of what the chart's showing us. So thank you for everyone for listening. Have yourselves a good day, and stay tuned for more videos. Thanks.